Hello, this is Ronnie. I'm back here with a clip taken from a long video that I just finished to record for my subscribers. I'm leaving the option for my services at 50% off for the first year open, and I'll be providing further details after the clip ends. So if you're interested, please stay on. I'll be talking to you again at the end of the clip. I would like you also to read carefully the disclaimer that I'm going to put up now, so that it is clear to you before you go ahead and watch the video. This is just a standard thing. Okay, we've got here the chart of spot gold. That's the daily, and I'm showing you two alternatives here, that being 1, 2, that being 3. We are in a big fourth wave. Okay, that says that it has no business going back to above 1819.4. It mustn't go above this line right here, but somehow I think it is going to go above that. And that is, in my opinion, going to turn the 1, 2, 3 into, in fact, A, B, C. That is my preferred reading at this point. Okay, that this is in fact an A, B, C, and we will see gold actually continuing higher. Why do I think so? First of all, we look at the close relative of gold. We're looking at silver, and in the case of silver, I think we have a reasonably good looking pattern that looks complete. But moreover, we have, as you know, the close analysis that we are carrying out on the Australian dollar, US dollar, Canadian dollar. We're looking also at copper, what copper is doing. It looks to me like this is a bottom that will not be tested soon. I could be flat wrong, but we know exactly the boundaries. Yes. At any point in time, if it goes to recheck this level, it tells you in a fourth wave, not having gone above this level. Okay, to be very clear. Yeah, if it stands in this range and it rose ABC, then it tells you you're in a fourth wave, and this could go on for a month, and then it's going to drop further. Okay, any sustained rally that will take it above this level will tell you almost certainly you have to treat this as an ABC, which means the prospects for gold look very good. It could go a lot higher. Okay, and in due course we will fit that with a big picture, whether we have witnessed here failure, whether there is a very complex pattern here. I think that I feel safer going with a wave count that I see in silver, the interpretation that I have for it, and also in the Australian dollar, US dollar, and to some extent, of course, the US dollar, Canadian dollar. I feel safer because that the pattern looks to me clearer than in the case of gold. But gold is not going to be left behind, obviously. This is the pattern that I modeled on the one I have in silver. I told you I'm not terribly keen on taking this as the fourth wave. That's the 60 minutes. But I've decided to do that, and we'll see what sort of result we are getting. But for now, that's a 1, 2, 3, 4, and that's a 1, 2, 3, 4, 5. So just a tiny jump, and that will finish the 5-wave run that began from here. Okay, if there is something else much more bullish, and there could definitely be, and you wonder what is that, I would just throw an idea here that could actually be a 1, 2, and that's a 1, 2, 3, 4, 3. I mean 1, 2, 3, 4, and that'll be a 3, meaning 1, 2, 3, 4, 5. It'll go like that. Yeah, but to stick with the structure that I'm seeing in Australian dollar, US dollar, and silver, I would prefer at this point to take this as a 1, 2, 3, 4, 5. That means that we have a small move coming, and then fluctuations, most likely, if this is correct, gold should not fall under 1812. I would say the absolute limit is right here, bottom of the fourth wave, 1808. It'll fluctuate around here for a few days next week, and then at some point next week it should take off in a very impulsive manner. So that is gold, spot gold. Here's silver, and that's the wave count I'm using. And you immediately see that the option of silver not continuing with this impulsive movement would yield in fact a fourth wave. So we are going to end up with an extended C, with this being 1, that's 2, that's 3, and what it's doing now is going to be an extended fourth wave. Yes, and then we will witness further decline, but it's not going to be dramatic, I think. So that is the alternative. That is the alternative to actually going up right away. Yes, coming down we had an A, B, C, D, E. That could be an X, with this being an A, B, C. And what you've witnessed here is simply another A, B, C. Perfectly possible. Okay, you can even encapsulate all of that as an A, that as a B, and an A, B, C can be encapsulated as a C. Normally you would expect a 1, 2, 3, 4, 5 to be a C, but it's not written in stone. These things can happen. You can have variations. It's just the way you label things, but the pattern is, the entire pattern looks corrective, and it looks like it is relating to a well-established first wave as far as I'm concerned, that being my first wave. So as I explained to you in the case of US dollar, Canadian dollar, you remember, and we're looking also at Australian dollar, US dollar, and we're looking at the potential of a third wave getting underway. Just imagine what this is going to do. We will not fail to sense that once it crosses 27. Okay, that's my instinct tells me. First of all, it's going to reach 27 not in 3 months. It's going to be there maybe in 3 weeks, 4 weeks. It's going to cross 27. Something is going to happen. It's going to get boiling here, boiling hot, and it's going to take off in a third wave. Yes, imagine we go to things like that. Yeah, of course, if it's impulsive, third wave, big, it's going to do that. That's the weekly. Let's now go to the 60 minutes, and we'll have a look how it came up. And I absolutely like the way it came up here. First of all, because it follows so faithfully my my wave count, and that is always a good thing. I think you agree with me. That being 1, 2, 3, 4, that could be our fifth wave reaching an end. So I would consider now short-term correction perfectly normal, between 22.20 to roughly 21.40, just oscillating around here, and at some point next week, take off. Take off. I am wrong. It goes down there. It sinks under 21.20, 21. It drags its feet. It looks miserable. That's not good. That is not an impulse wave, a third wave. No, that looks like a fourth wave. So that means it's going to stay around here for a while. At some point, it's going to retest this again, and this level, and eventually it will continue down. But I told you, it's not going to be a dramatic meltdown. It's just going to be dragging its feet further and further and further to try to get as many people off the precious metals train before it takes off big. My website, the homepage is right here. It's Wave Mastery, www.wavemastery.com. Yeah, wavemastery in one word.com. That takes you to the homepage. You can scroll down, look through some things that I've written here, some recommendations from past users and current users, and that is essentially the offer currently open only to first-time subscribers. Okay, so there is the daily service, daily videos that are preceded by a trial, so you can take the trial for 1 week, and at the end of that, if you're happy, you do nothing, you go on to the plan of half price. Essentially 79 presents half price of the normal price, and that will be good for 1 year. That means 12 payments of 79. If you want to watch just the weekend videos, then you go for this one, and it does give you access to the weekend videos, and I often also insert a video as a bonus midweek, just to keep you on track, to see a little bit where things are moving, because sometimes 1 week of full price action is a lot, and the wave count can change, especially if you're a short-term trader. You really want to know what's happening. So that is essentially the situation. If you decide to go, for example, for the daily videos, you click here. It takes you to the page where it explains to you. You should read that. It explains to you what is covered, etc., etc. If you like what you read, you click here, subscribe. It takes you to PayPal, because my paying system is through PayPal, and you pay through PayPal. You can see you have the trial at $9.99. That's for the first 7 days. As I said, if you like what you see, do nothing. It just goes automatically. If you don't like, you can cancel. Or if you don't know how to cancel, or you have any doubt, you have any question, you can write to me, of course. Once you go through and you pay, you come back, PayPal will send you back to my website to fill in your profile details, choose your login, and once you do that, you will be led automatically to the page with the links to the various videos classified by date. If at any point in time in this process you have a problem, things are not going as I'm describing to you right now, all you have to do is just contact me and I'll help you out. That is essentially it. So you'll have 1 week to look at things. I would like to just spend a minute about the website itself. I have written here a few articles. Is this website for me? You can go through that one. Psychology and trading, trading and the arts, why join? Yes, each of these articles could perhaps help you to see how to relate to my website, but there is no substitute, in my opinion, to actually take a trial. You know, you take a trial, and I want to say another thing. You take a trial and you can't make up your mind. You want more time to think. Fine, I understand that. Then you cancel, but then you are not allowed to take another trial. Please, I want to be very clear about that. There are people who abuse this, and it's really not right. You're not allowed to take more than one trial, okay? A trial is a trial. But if you're interested, after you take a trial, you're interested to come back, you can still benefit from the low price for the next full year. But you have to write to me, and then I will send you a special link without a trial. And if you join, then you're going to go immediately onto the reduced price plan for 12 months. Okay? If you take another trial after you took already one, I am going to have to cancel that and refund you. And if you do that 2 or 3 times, I'm just going to blacklist you, because there are people who have been doing it, and I'm afraid this is really absolutely not right. This is subscribe here. Use subscription. Once you are logged in, you will see this one highlighting you daily service videos or weekend service videos. Yeah, it will show which one you really have the right to access. The daily service videos, to be very clear, they cover the weekend service videos. Okay, so you don't have to subscribe to both. The daily covers everything I do. The weekend, of course, is more selective. Now, I have here resources. There are chart galleries right here. Chart 1, 2, 3. There are plenty of charts here that give you an idea how I go about subdividing various market action here. I covered a lot of markets, and you can see there is history here that could be very interesting for you to just go through. Let's see, platinum, for example. Yes, that's 1973 to 1978. If you click right on top where it shows you the hand, the chart opens up big. You can print it if you like. Here's an example of platinum, April 1980. 1, 2, 3, 4, 5, and then the huge correction that followed after that. So there's plenty for you, whichever market you're interested in, the financials, commodities, precious metals, etc. Okay, so that's chart galleries. Then useful links, as the name implies. Yes, recommended reading list. You have a long list of books here that I've read over the years that I found very interesting. Of course, I have many more books that I would like to add. It's just a question of time. I don't always have time to update this one. But the books that you find here did help me in the beginning, and still the information here is very valuable in these books. For example, Kroll. I don't know how many of you heard about Stanley Kroll. Stanley Kroll was a really imaginative fellow trader that wrote very well about his own trading and in trading in general. I learned a lot from these books. And of course, if you haven't heard about Reminiscence of a Stock Operator, you should get this book and read it. You will not regret. This is a book that most traders, I think, have come across and read. It is very, very interesting. And as you go down the list, you will see if there are things that are of interest to you. Of course, go ahead, get them. Some of them are even available online for free as a PDF. Check that. If you have questions about that, you can even contact me. Here's the contact us, and you put your name. Please make sure you give me the right email address. Message, simple maths, submit, I get it. You'll hear from me. I'm based in Belgium, so if you write to me from Australia or from the US and I'm having my rest, do not be surprised if I don't react quickly, okay? Normally within a day you will have a reply from me. I check my email fairly regularly. So that's about it. Hope to see you visiting my website. Hope to see you taking a trial. If you have any questions, again, don't hesitate. Get in touch with me, and wishing you a great trading week. Bye now.